Good morning. Well, the Aussie share market is set to rise at the open by about 0.6% or 41 points. Welcome news, as that should see the benchmark S&P ASX 200 claw back most of that 0.7% loss that we felt yesterday. It comes as European and American stock markets rose on hopes of a US-China trade deal making progress. And on the eve of official trade talks between China and the US kicking off in America in their time, a China official came out revealing their nation is open to reaching a partial deal. That news was expected to push equities high when their market opened last night, and indeed it did. Their major indices didn't, however, maintain their intraday trading highs though, as hopes were somewhat dampened as Reuters come out saying that China has lowered its expectations of the trade talks. Nevertheless, it was a positive close in the US, with the major indices all higher, the S&P 500 up 0.9%, the Dow up 0.7%, while the tech-heavy Nasdaq was up the most, 1%. In terms of economic news out today here in Australia, home loan data out for August. We previously saw home loans rise 5% in the month, proving the property market is sprouting green shoots. But forecasts are already suggesting a slight rise, not as much as the prior month. We're expecting a slight rise of 0.2% in August. So if the numbers are worse than what the market is expecting, that won't be very good today for banking stocks, and we should see banking stocks fall. But some traders will be watching this data very closely, and if indeed the data isn't what the market expects, traders will be taking this as a buying opportunity and buying in the dip if banking stocks do indeed fall today. Over to commodities, and amid the uncertainty over those US-China trade talks, as well as over in Britain. With Britain's exit from the European Union, the gold price rose overnight by about 0.5% to $1,510. Or I'll say that again, sorry. The gold price rose to $1,510 an ounce. The upcoming trade negotiations in Washington will be crucial for telling traders if the gold price will maintain that psychological $1,500 level for the rest of this year. And if the talks in the US aren't in favour of the US, we can expect the gold price to continue to push higher for the rest of the year. In the interim today, however, what's in it for you? Well, we can expect gold miners on the ASX to continue to rise again today. Yesterday, as we mentioned on our update, we saw Newcrest Mining, St Barbara and Resolute Mining rise 1% or over 1% in intraday levels, really on the back of the gold price rising. Over to iron ore. The iron ore price has taken a bit of a hit. It's down by about 4%, hitting $91.06, but that didn't really affect the New York listed stocks BHP and Rio Tinto, which rose. However, our locally listed Rio Tinto and BHP are starting to really see sellers mount more than buys today. So we should see Rio Tinto and BHP drop at the open on the back of the iron ore price dip. Over to the Aussie dollar, it's down slightly on yesterday's close. It's now at 67.24 US cents. I'll see you once markets are closed. Have a great day. Happy trading.